Welcome back to the series on PPE. At this stage, we have responded to the question by providing journals pertaining to PPE. Using the existing fact pattern in this video, I will teach you how to disclose the revaluation surplus in equity. In terms of our fact pattern, the most salient point is mentioned in point number 2 of our fact pattern. The maximum amount is transferred from the revaluation surplus account to the retained earnings account on an annual basis. Let's see what our required says. In terms of our required, provide an extract from the Statement of Changes in Equity for the year ended 31 December 2006, showing the retained earnings and revaluation surplus only, for 4 marks. Accounting policies are not required. So in order to tackle this, bear in mind that we've already done the heavy duty work. While you may think that disclosing the reval surplus may be 4 marks, if you look at your screen, you'd need to understand that we'd have to calculate a lot of things before actually getting to the reval surplus. We needed to calculate our deferred tax. We needed to have our carrying amount correct. We needed to make sure that our tax base was correct. We need to make sure that our rate was correct before we have the correct deferred tax amount. Okay, in terms of the table, your most relevant rows and columns that you need to focus on are the items shaded in blue. Please revisit part 5 of the series should you wish to recap on how we've calculated the revaluation surplus. And since only the last 2 columns are relevant, I'm going to hide everything else going forward in future slides. Let me just take you through the numbers and do a quick recap of the numbers. So first and foremost, a revaluation took place just before 1 Jan 06 of 120,000, 36,000 of which pertains to deferred tax, leaving you with a net of 84,000 in your revaluation surplus account. Thereafter, you then depreciated the asset, which then impacted your revaluation surplus account by 14,000. As you depreciate the asset, you also technically depreciating your revaluation surplus. As you dispose of the asset, you also technically disposing or releasing a part of your reval surplus to retained earnings. For the existing assets that you hold, when you depreciate it, you also need to transfer a portion of that from revaluation surplus to retained earnings, which is what we've calculated, being 8,400. As your new asset was not revalued ever since you've acquired it, this means that you will not need to account for any change in the depreciation of your new asset under your revaluation surplus. Now let's see how all of this is going to look in the note. On the left hand side of your screen, you have your deferred tax table. Once again, all of the irrelevant columns has been hidden. So let's start. First, you have your 120,000 revaluation surplus and your deferred tax of 36, which gives you a net of 84,000. So the first part is easy. To disclose this, you would firstly make sure that you have all your relevant headings in place. ABC Limited, extract from the Statement of Changes in Equity for the year ended 31 December 06. And on 2 separate lines, you would account for your revaluation surplus as well as your deferred tax pertaining to your revaluation surplus. The next part is to account for the effect on your revaluation surplus due to the movement in depreciation. If you look at your screen, we have your depreciation of 14,000 plus 8,400 to give you a total of 22,400. Since this amount over here is being transferred out of revaluation surplus, remember, it may be going out of revaluation surplus, but it is going into your retained earnings. So make sure that you account for the minus and plus effect. It will have a nil impact on equity, but you need to also disclose the movement going into your retained earnings. And the last part is we need to then account for the movement in our revaluation surplus due to the disposal of plant. And this is a simple 28,000 coming out of your revaluation surplus and going into retained earnings. The last step is to disclose your closing balance. As the question does not give us an opening for retained earnings, our closing is denoted as XX. And there you have it, people, your revaluation surplus and your retained earnings being disclosed in your statement of changes in equity. I hope that you've enjoyed this video. Please like and subscribe for more.